How's it going? Ali Tarafdar back with a brand new video for you guys. I think I want to talk about the idea of putting together a funding profile so that you can actually go out there and borrow. A lot of people actually get this wrong. It's because they miscalculate what they're going to get. I talked about the RTS, which you guys know is the rate, the transaction types, and the sizes. But today I want to talk about the breakdown of how to qualify for proper funding and the ratios that most creditors and lenders might use, against you or in their own workings to ensure that you can get a certain amount of dollars when it comes to asking to borrow credit. One of the common things you'll come across is the fact that the first thing you need to know about the funding portfolio is start with what you're eligible for, right? And the way to do that is if you look down on your credit profile, you're going to start analyzing that you have certain debt amounts that are inconsistent. So what I mean by that is you have, let's say, probably 5 credit cards. Of those 5 credit cards, you have balances in them. There could be a total of limits of, let's say, $10,000. And then you have a balance of like $7,000 or $8,000. And you have some decent credit history. You can have like a 680, 700 score. And then you think that you can actually go out there and get like $50, $100, $120,000 in credit. And that's without adding authorized users or other primary trade lines. And the reason why this is the wrong approach is because what ends up happening is you're actually going to get like $3,000 to $4,000 credit cards, maybe even 10,000 max. And that's the max. And the reason why you're going to get that as the maximum is because you haven't given yourself time to look at the factors that are increasing your score and reducing the risk on lenders. When you're overcapacitated, meaning like you have a lot of debt that you're carrying and those debts are so large and you have no large limits available, what the lender looks at on a potential underwriting perspective is, hey, of that limit that we're going to give them, how much of that are we likely not to keep open, right? So if they borrow $5,000 from us, probably they're going to start maxing it out and being close to $4,500 mark in debt and the balance. And that's a fact that most lenders will look at. That's the fact that most of these lenders understand and they get scared of. Prospectively, though, what ends up happening is now you're in risk and you probably won't get a lot of money. So if you architect your file the other way around, okay, so let's analyze a file. So let's say you have 5 credit cards on file, no derogatories, no inquiries in the last 6 months. I mean, no inquiries, maybe 3 max in the last 3 months. And then what you do is you look at your personal identifiers, they're consistent, your addresses are consistent, et cetera, et cetera. It comes down to the public record section. You don't have any bankruptcies, no foreclosures, etc. You go down to your accounts and you look at your balances and your debt ratio, and you see that you have 30% balance or less, which is great. A lot of people say you just keep it below 60%. That's okay. But if you want to maximize funding, keep it below 30. I'll go even as far as 25%. Then you go below that and you say, how much history do I have on my credit file? If you have your history that's like around 5+ years, that's great. If you have history that's 3+ years, that's great. What you want is a history of at least 2 years. And you go down that and you see, okay, well, how many late payments have I had? 0. Okay, that's perfect. That's an ideal file. How active is those accounts? Like if I had balances in the previous few months that I'm carrying and paying on time, that what ends up happening is there's payment history that's being built. That's perfect. Then finally what you do is to prepare your file is you may add certain primary trade lines. The ones, like I said, the New Coast Direct, My Jewelers Club, Hudson Chase, Self Lender. There's other ones that are coming out. That's all great. Again, if it's just one credit bureau, what you want to do is go to a furniture store, an electronics department store in your neighborhood. Make it very relevant to your file. If you're in North Carolina, go in a furniture store in North Carolina and ask for credit extensions on certain items and ask them, hey, what bureaus do you guys work with? And most of them will tell you 1 or 2 bureaus. And it's much better if it's relevant to your personal relationship with the area that you're in. What it does is it shows lenders, hey, this person is actually, most will say it doesn't really matter, but it's contextual to you. And what ends up happening is most probably if you're going to go to a credit union within that area, which are very generous when it comes to giving credit, they will see the supporting communities of creditors that you actually have relationships with. And most probably increases the chances of approval under management underwriting guidelines, right? So some of those areas, that's what you want to explore. When you have those primaries added, you can add some authorized users. Lately, I've seen a file with unauthorized user from American Express and some other credit card companies. And those authorized users have like almost maxed out debt. So they're not really helping, right? If you have authorized users that you're going to see like 30% debt or something, be very careful. I would just back away from that. You want authorized users that have like less than 15% debt or something like that. With good limits. You want a 10,000 plus limit. You want good history on there. You're just leveraging their history. You don't have the payment history yourself. What you have is their history and their credibility being extended to you as a courtesy, in addition to the utilization that helps you. The rest of the factors are based on your individual payment history, your relationships on an existing level, as well as what kind of profile you have in terms of leverage, how much utilization you have available compared to the balances that you're carrying and the limits that you have. So once you get through that part, now it's time to apply for funding. A lot of people say, well, I'd like to apply online. I'd like to do that. I'll give it to somebody to apply for me. You can do that. If you go in person and you take a physical application and you walk them through and you do it like that as well, it works. Of course, a lot of banks out there like Amex, all these other guys, they don't necessarily have branches that you can reach out unless otherwise they're Amex partners, like certain banks that offer Amex cards under their own brand and stuff like that. So physically walking in actually does help. It builds your relationship with those branches. I think it helps also if you do it online through research. You can actually call them and you can apply on the phone. There have departments out there that actually do approvals for you. You can ask them certain questions about what you're looking for. What's an ideal size? What can I get approved for? Can you give me some example of like a person that got approved based on my credit? Mimicking my credit file. So you get to actually speak a little bit more about the approval factors when you're physically speaking on the phone or in person. So that's one of those things that I think would help you get some funding. Most of you guys will get credit cards, as a starting point. Lines of credit are more of like certain things that they do income verifications if you want larger ones, but you can actually get no documentation required lines of credit with some credit unions that are very generous, but you need to be members with them. There are certain requirements. Certain credit unions will require for you to be members with them for at least 3 months. You have deposit history with them, and then they'll be generous in terms of what they can give you as a credit. They have very, very generous rates and limits as well. Maybe that's one of those areas that you want to start with. Outside of that, I think that pretty much that covers the idea of funding properly. And just to recap one more time, have no derogatories in your file. Make sure your personal identifiers are consistent. Have some relationships that are existing on your credit reports. Utilization wise, make sure your debts are 30% or less in terms of what you have available for a limit and the balances that you're carrying. Make sure you have ongoing payment history with some of the balances that you're going. You don't want to have any late payments. That's going to cause some damage there in underwriting. If you're going to add primary trade lines, go for the list that I gave you. In addition to that, try to work locally as well to see if you can add some primaries. That's going to help. Based on electronics, furniture, anything that you need, so supplies, etc., etc. And then beyond that, when you're going for underwriting, just ask some questions, be involved, ask for a similar type of file, what kind of limits you can get, and then basically ask for any type of promos they have, cash advance promos, transfer promos, rewards, cashback, etc. Take advantage, learn, and be involved, usually, right? So that's the process. If you guys are still curious as to, how to fix your credit, well, you have my channel. You have a lot of content on this channel that you should take advantage of. If you still want to get part of the CDR sweep, go ahead. The financing program, I'm going to shut it down in the next month. So I don't think I'm going to offer that anymore. I'm going to keep it at the $1,500 to $3,500. And then, of course, the UPCM course that I have out there is going to be priced to $995 by the end of the month. And that's pretty much it, guys, because I'm going to be adding some resources and tools in there as well. So I'm going to put the price back up because it is the way it is. I try to respect everybody that came in early, and I want to make it fair for everybody also. So beyond this point, the CDR sweep is going to come out of the financing plan by the end of the month, and the UPCM is going to go back up to $995. All right. So with that said and done, guys, I hope that this video was helpful, informative. If you like the content, give it a thumbs up. If you want to apply for the CDR sweep, up there or here, you're going to see a link to the description of the application. Go for it. And of course, on the description of this video, you will see the UPCM course if you want to hop in and take advantage of that as well. With that said and done, guys, this is Tarafdar, your guide and mentor. Bye for now.